Are you someone who's skydived 3 times, hiked Mount Everest? Maybe you take on the newest roller coaster without hesitation. I can say you are a risk taker. But do you have the same thoughts when it comes to your money, or would you prefer more of a safety net? Figuring out your risk tolerance is a discussion today with Corey Sickles. He is the president of Safe Harbor Retirement Group. Good to see you, Corey.
Glad to be here, Robin.
All right, what is, first of all, the definition, as you would put it, of your financial risk tolerance?
What I would really say is how much are you willing to actually lose if the market has a correction, or if it does go down? What can you really stomach? When you look at that statement that you get quarterly, if it's a 401k or on your monthly statement. And of course, everyone's different. It depends on your age, and there's a lot of things that kind of go into that. But at the end of the day, that's really what it kind of boils down to.
And does it also depend, and I think this goes into you're saying there's a lot of factors, but some people check their statement every day. Some people check their statement every quarter. Some people are on the yearly. And I feel like it's, it can be hard to stomach when you check it every single day and you see a drop or whatever, right?
Exactly. Well, 2022 would have been that case, right?
Yeah.
There were a lot of people that probably never even looked at their statements because they were listening to the news and they knew it was going down. And there's others that look at it on a daily basis. But if you do look at it on a daily basis, odds are you might not have that. You might not have the stomach to see all those losses on a daily basis as well.
All right, Corey, talk about then what factors into it. What are some of the things you're going to look at?
Well, one of the things, of course, time horizon, right? Someone that's 50 or 54 like my age, I might be a little bit more aggressive than someone that's 60 or 65 that's getting ready to maybe retire within a year or two. But I still might not be as risky as someone that's in their 20s and 30s because they have a lot of time for that to come back. And again, how much are you willing to lose? And that of course that's really a big one. But I think time horizon is probably the biggest one.
And that goes into, as well, the main point of it is you ask them right off the bat, like, what are you trying to do with this money?
That's exactly right. When you're going to be able to have access to it. You might have different types of investments, right? You might have your IRA or your 401k, and say you're 50 years old. Well, you're not going to be able to touch that for at least 10 years.
Right.
But you also might have something where you're saving for maybe buy a new car or maybe a down payment on a house. The one thing you don't want to have with that particular investment is in something that might drop 20% over a course of a year because you might need access to that cash. So not only is it, on what you really have to kind of look at what accounts and what am I trying to accomplish with those accounts, and
right.
when am I going to need money from those from that money as well.
So then once you know that risk tolerance score, that overarching kind of bottom line you're willing to drop to, what do you do with that? What does that mean when it comes to your investments?
So one of the things that we do is once we have that risk score, then we're going to look at your overall portfolio, right? And then we're going to ask those questions I just talked about, when you're going to need access to that money or anything like that. But then we kind of start to lay down a portfolio that's going to meet those risk demands, right? And one of the things that we try to do, of course, is whether we're meeting with our clients on an annual basis or maybe every 6 months or whatever that time frame might be, then we're going to review that every year, right? Because next year you're one step closer to retirement, and maybe now you're 2 or 3 years away, and that's when we have to start kind of looking at maybe moving some of those investments around. And one of the things that we do more than anything is when you're a client of ours, we don't manage your money that's maybe in your 401k, but we have the ability, if you provide us, for example, what your investment options are, we can help tailor that for our clients as well.
Okay, so and that is part of, as you mentioned always, right, diversifying that portfolio,
exactly.
Right?
Yep, diversification's not only from a risk standpoint, but maybe from a tax standpoint. You're putting money into a Roth, you're putting money into an IRA as well. But yeah, diversification's key, and that's one of the things that we do for all of our clients. And
you do that, and you help them find their risk tolerance score as well, correct?
We do, and it's very easy. If you go to our website at safeharboroh.com, right at the very top, it says risk assessment. You can click on that. There's 11 questions. And once you kind of go through that, then we can kind of explain to you what that really means and what you really need to take action on, for your portfolios as well.
Okay, so a quick survey and then hopefully some peace of mind as you kind of move
That's exactly
forward.
right. That's exactly right.
Corey with Safe Harbor, complimentary meetings as well if you want to call up Corey and his team. So thank you.
Thank you, Robin.